All right, folks, we got to talk about this one. A major warning sign for recession looming here in the United States. Now, most folks don't want to talk about this. You're not going to hear this with the CNBC talking head pundits, right? And when you listen to the FinTwit bros, right? Financial Twitter, the experts on Twitter who want to chime in and say, oh, don't worry, bro, my NVIDIA stock's up. Meanwhile, we're showcasing how the whole system is breaking down, and the economic data, if you actually take a serious look at it, is actually terrible. Let's get right on into it, folks. As I was saying, we have a NVIDIA chart that is just printing green candles to start off this year, and this has everyone in the space, right? You can really see the disconnect between Wall Street and Main Street. On Main Street, the recession's already here. Some businesses are going away. It's not just a recession, it is death. It is turn the key. It's hand it back to the dealer for the car. It's hand it back to the bank for the home. This is seriously getting bad, folks, and most folks don't want to talk about this because it's not exciting. It doesn't get clicks, but this is the real economic data that I'm going to share with you guys just to highlight where we're at in this economy, looming recession, so that you guys can stay prepared. Remember, please subscribe, hit the notification bell, and if you guys like my content, please smash that thumbs up, drop a comment down below, let me know what you think of this data, and then if you want to get tapped in with our community, it's all over at my website, zachrector.com. Now let's rock and roll, folks. Right on into it. You guys can see this is the chart for NVIDIA back up since the start of this year. There's a couple red candles right there on Friday, and then on January 2nd is when the markets open back up. So one red candle on the first day of trading, but ever since the start of this year, we are up 20% for NVIDIA, printing green candles, and the market here is completely oblivious to what is taking place here in the real economy. The data point, one of the many data points that shows the recession is looming that we're starting off here is the New York Fed's manufacturing survey. Trouble for the U.S. economy is ahead as the Empire State Gauge sinks to the lowest levels since the pandemic. Okay, so it went negative 43.7, and the economists had expected a negative reading of negative 4. So it is 10 times worse than the economists and the talking head pundits expected, with a negative 43.7, plunging 29.2 points down to this most recent reading. Over the past 2 months, the index has plummeted 58.2 points, largely because of a decline in new orders. Orders provide an indication of future business activity. They're not coming in. Folks have no extra money. And at the same point, right, they're trying to say that they've won the fight against inflation. Well, you definitely haven't. You guys are just manipulating the data to show that inflation is going back down. But even through your flawed metrics and your manipulated data, the CPI lie printed a 3.4% last week, and that is going back up. So now the trend for inflation is back up, and the economy, the economic data is absolutely terrible. This is putting the Fed between a rock and a hard place, and it's going to be interesting to see how long can they go keeping the rates elevated higher for longer when the economy is breaking in such a massive way, okay? Now, when you look at this is very interesting. The expectation was negative 5. The actual that comes in is 43.7. And the previous reading was 14.5. But as I just read out for you guys, we're down 58 points in just the last, 2 months. So in the last 2 months, the trend is down 58 points because we were positive there for a little bit. We got a couple positive prints there to finish off the year. And what you're seeing here is that we haven't been at a level this low since the pandemic. And that's the worst that this ever read, which makes sense, right? 2020, the simulation events basically shut down the whole economy. And so the manufacturing survey here went down to its lowest levels ever. But we haven't been at a level this low, and we've now surpassed the level that we hit during the Great Financial Crisis. Another data point taking us back to the Great Financial Crisis. This is not looking good. We look a little bit further. How about auto loan delinquencies? The percentages of borrowers 60 days past due on their auto loans has reached the highest level since 1996. So we have data points that are taking us past the Great Financial Crisis. Some of them go all the way back worse than the Great Depression. Some of these data points are the worst prints that they've ever read in history since they started tracking some of this stuff. And then this is the real one that I wanted to share with you guys. And this one hits home for me as a small business owner myself. I feel the pain on Main Street for the small businesses that run this country, that employ over half of the workforce in America. This is not a good signal. 41% of small businesses can't pay rent this month. This was a survey of small business owners from Alignable, in which they found that the hardship varies by industry, but notably 57% of beauty salons said that they couldn't make rent, as well as 45% of gyms, 44% of retail, and 44% of restaurants. Making matters worse, this occurred during a quarter when more money should be coming in and rent delinquency rates should be decreasing, Alignable said. But so far this quarter, the opposite has been true. Last month, rent delinquency rates increased 7 percentage points from 30% in September to 37% in October. And now, remember folks, this is data from November. How do you think that the data has been in December? How do you think it's going to turn out for January, right? As the situation continues to deteriorate. And I mean, as we look at this, Empire State Manufacturing Survey at, approaching levels worse than the Great Financial Crisis, only time it's been worse is since the pandemic. How do you think that these manufacturers are going to be paying their rent when the orders aren't coming in, right? When you read right here, it says the index for new orders dropped 38.1 points to negative 49.4 in January. Shipments fell 24.9 points to negative 31.3. So the orders are not coming in. How are the manufacturers going to pay their rent? Business owners cite a range of reasons for the difficulty making rent, including higher rent costs and lower revenue, but 60% cite inflation. Well, gee, they should, be happy with things, right? Inflation's down. The Fed's won the fight against inflation. And now they, quote, want to just manage the business cycle. Right. Well, one indicator of the toll inflation is taking on businesses is a steep drop in the percentages of small businesses that are fully recovered, earning as much, if not more, than they did monthly prior to COVID. So many of these companies have not recovered as far as revenue on a monthly basis to where they were at before COVID. The percentage was 24% in October, but dropped to 14% in November, an all-time low. Michigan had the highest percentages of small business owners unable to make rent at 51%, with New York in second place at 49%, and Massachusetts third highest at 45%. Now, this is a survey of 6,000 small businesses in November, so take it for what it's worth, but it's just another data point that adds insight that reiterates the point that we've been trying to make, that this is not good. That although Nvidia's up to a new all-time high, Bitcoin pumped up to 49,000, we were putting out the warnings, trying to tell the Bitcoin bros, you're getting suckered in, you're about to get dumped on, and that's exactly what's happened. We're sounding the alarm for the Nvidia FinTwit bros that think that they're just, trading experts with their Nvidia, right? And Nvidia, along with the other Magnificent Six, right? The Magnificent Seven, including Nvidia, are the 7 stocks that have really kept the S&P 500 propped up and have taken it back to a new all-time high. And the reason why the market's been going back up as we finished off the year, right, this Christmas Santa rally, is for the expectations that the Fed had beat the fight against inflation, that they were just going to be managing the business cycle. And what managing the business cycle means is bringing rates back down. But as we just saw from CPI last week, they can't bring rates back down anytime soon. Absolutely not, because inflation's still running hot. And they're not going to come in to save Main Street until people are about to hit the street in masses. They don't care about blood in the streets. No, that's fine. One would argue that maybe that's their plan, is to wipe out the middle class and create blood in the streets so that the elites can come in and buy all the assets up for pennies on the dollar. And that's kind of what they've been doing. But they're not, they don't really concern themselves with blood in the streets. They're only going to be concerned and come on out when the politicians say, hey, we need some help covering this recession up because it's the economy, stupid. It's the classic saying in politics, we're in an election cycle, So watch out for this thing to crash, but then watch out for a similar V-shaped recovery that we got during 2020. Exactly same thing I think is going to be playing out. Another election year. We're going to open back up Pal's Pandora's box for a round 2, stimmy checks, student loan forgiveness, you name it. Maybe they'll forgive auto loans. Maybe they'll forgive mortgage. Who knows? Money for everyone. You get your house paid off for free. You get your student loan forgiven. You get your auto loan forgiven. We're going to send out more checks, and we'll see what they do. But in my analysis, what I believe is firmly coming our way is a historical correction. And if you look at the Chinese stock market, by the way, it's already down 44% from the all-time highs. Now, 20% is a bear market. It's a technical recession. It's a technical bear market. It's a bearish move. Well, Chinese stocks are down 44%. That's coming here. I don't know if it's going to be as bad or as drastic, but it's coming here. And even if we do just half of what's been accomplished in the Chinese stock market, we're still in bear market territory. And so prepare yourselves to buy the dip. We've already got a dip in crypto. I think that we're probably going to be brought down lower. Take advantage of it because it's going to be the last buying opportunities before the Fed comes in and saves the day. It's the plunge protection team. It's Pal's protection team. It's Pal's Pandora's box. He's going to open it back up and try to save the day. So take advantage of the opportunity because these assets are going to be going back up as inflation returns and the asset prices go crazy again with free money going out, forgiveness. Who knows what they're going to pull out of their sleeve as they try to save this election. And oh, by the way, they know that they're going to lose. And that's another reason why they're going to let all hell break loose. So please stay prepared. We don't just talk about crypto here, right? Stay prepared. We know that they've, been sending everything our way. This is a controlled demolition. So stay prepared here by making sure you're subscribed. Hit that notification bell so you don't miss any of our updates. If you appreciate our content, please like it, drop a comment down below, and you can share it out far and wide to help us spread this message, to help us sound the alarm. Because I want you, the regular people on Main Street, in the middle class, that are just like me, trying to provide for your family. I'm on vacation right now. For the common folks that want to be able to work their butts off, maybe go enjoy, one vacation per year, right? Want to be able to pay your bills, feed your family quality food, put a nice little home over your house, and maybe build a little bit of generational wealth, right? At the very bare minimum, we just want to be able to take care of our families. And God willing, this is our opportunity to bring order to the chaos, to take advantage of the destruction that they are bringing. And we know where this thing goes from here. And it's a fourth industrial revolution. We've invested in the digital assets, but we've also protected and hedged our wealth with precious metals. So we got old money, we got new money. We got hedges here, we got small businesses. We've been doing everything in our ability to take advantage of this opportunity, the greatest transfer of wealth in world history. Thank you for staying on this journey with me, and I will keep you guys updated the whole way through. I appreciate all of you guys. God bless all of you, and I will see you in the next one. Take care.